We're back with Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.
Hello, and welcome back to Seattle Real Estate Radio here on KKOL 1300 AM. Dan, who is this fine gentleman sitting next to you?
I'm excited, man. This is Scott Estes with the Estes team. I actually know Scott. We used to work for the same mortgage company.
Wow.
And great guy. We're going to be talking about hard money, so it kind of has a little to do with financing, my gig. But this is something that I do not do. I do not specialize in it, and I don't know much about. That's why he's on the show.
And that's, I kind of do the same thing. If I don't know something, if I don't specialize in it, I find someone that is an expert, and I pass those people on to them. That's kind of what I hear you're saying about him with hard money.
Yeah, great reputation in the real estate and lending community, and he's here today. I'm really excited. So I want to give you a real quick bio on Scott.
Okay.
If you go to Seattle Real Estate Radio, you can read all about him. There's a link to his site, everything.
And watch the video of us.
Watch everything, the podcast, the video, but you can learn a little bit more about him and get his contact info.
Exactly.
But Scott Estes is a hard money lender. Okay. And we're going to go into what exactly hard money is. But for the last 15 years, Scott and his team have been specializing in purchase money and private money loans. Scott and his team have built a reputation over the years of, I love this, saving the day when other lenders couldn't figure it out.
Nice.
I kind of do that for you often.
You do, actually. Clean up other lenders' messes for me.
I tell people,
sometimes.
Hey, what do you do for a living? I said, I'm a janitor. And I'm a mortgage lender. I clean up other people's messes, and no. So, and it sounds like that's what he does with
hard money.
Yeah,
when lenders can't help you out, then he comes in with the private money and
fixes and saves the day.
Exactly.
And I'll give you a couple of examples in a minute. But Scott's won numerous awards in the mortgage lending community. But he's a private money expert serving King, Snohomish, and Pierce County. Scott loves helping real estate investors get in front of opportunistic opportunities. Opportunistic opportunities.
That's a little hard to say.
It's a tough one. But here's the thing. He offers, much like us, unparalleled service from start to finish. And in a hard money lending or in a financing, it's tough. No, it's not normal
at all.
No. So if you're a real estate investor, the purpose of today's show is centered around whether or not you are a real estate investor, maybe a first-time home buyer that wants to invest in real estate. You started investing young. Or just want an all-in-one fix-it-and-flip-it loan. Scott's going to be your guy. You can't afford to not have a conversation, at least with this guy. So welcome, man.
Thank you very much. I appreciate it. What a great intro.
Well, it was a long one. Hopefully it wasn't too much. But we're really excited to have you on, and this is going to be value-packed. I love having people on, much like financial planners, that can actually make our clients money.
I know.
Those are mine. I mean, dude, how much money have you made in real estate?
I couldn't even tell you.
As an investor.
Yeah, exactly. So I couldn't even tell you.
This guy today is going to help our listeners make money. So
we like that.
We do. So
most people do.
What is hard money?
We got to jump right into it. That's a good place to start. What the heck is hard money? Let's dispel any rumors or anything that people might think it is, and just give them a straightforward answer. What is it?
I'm smiling because I have two amazing professionals, both in real estate and lending, asking that very question. What is private money? And if you guys are still, not quite sure, I can only imagine how the listeners feel.
Yeah, exactly.
Because most lenders have no idea how this works. Most agents don't. I travel all over, and I've found that as I train agents and lenders both, nobody's hands go up when you ask who's done a hard money or private money loan. They've heard of it, they kind of know about it, but they don't know much about it.
Or with the mortgage meltdown, it's dirty money.
Yeah,
or
and I think that's what
it's subprime. Or it's bad.
That's what I was referring to because people.
Which it's not.
Right. No. In hard money, you get the Guido. You're going to come break my legs. No, we're in a great position actually, so we don't have to do that at all.
No, we get to take your house.
Yeah, exactly.
Exactly. Yeah.
So, private money is typically issued by an investor or a company that does investment, for investment purposes only.
Okay.
So private money is like a tool in a toolbox, just like normal lending, right? Mm-hmm. If I'm going to go to Dan opens up his toolbox and he's got conventional FHA, VA, Fannie, Freddie, Home Path. I mean, all these different options, right?
Yep.
And as you're talking to a client, you're trying to figure out where they fit, right?
Mm-hmm.
And so
which tool is going to work best?
Yeah, which tool is going to work best? But this private money thing just normally gets left somewhere on the side, and they just don't worry about it because they heard that the rates were high, or they just the lender doesn't do do that. So they're just like, we don't talk about that.
Exactly.
Right? Because at an auction or all cash, that's not something a bank does. So when they don't know about it, they confuse it and then just push it aside.
Exactly.
So I'm here to just tell the dirty truth. It's not hard or crazy. It's actually easier than ever. You know, most agents find that, when I close in 7 days and call them and like, hey, we're done.
Yeah.
They're shocked. They can't even believe, like, well, what's next? Like no, we're done.
What do we have to do now?
Well, one of the things I love about Scott is, much like how I run my business, transparency is key. And so the first question that I get asked when I meet a new client is, what is your rate and what are your fees? It's the only thing we have in common until there's a relationship, right? And being fully transparent, I'm going to tell our listeners, hard money is expensive. We're not going to lie to you. It's not. You're not going to get correct me if I'm wrong, Scott. You're not going to get a 4% 30-year fixed or a 4% fixed loan on hard money.
Absolutely.
Okay. So it is a little bit more expensive, but it's strategic.
Yeah, you got to use it the right way.
You got to use it the right way, and Scott's going to show us how to do that today. Okay. So who usually gets hard money?
Real estate investors.
Okay.
People that it's got to be for investment purposes. So it cannot be for you to, you've had an issue with credit and foreclosure or something, and now you're trying to get back in and own a house. That's not going to be the solution whatsoever.
Got it.
It's got to be for an investment purpose. So I cannot touch your owner-occupied house. If you have $1 million house, you own it free and clear, I cannot take any money, not even a penny out of that, and go help you acquire another property. You would have to talk to my friend Dan. He could do a cash-out refi. You could do a home equity line of credit. There's options that you can do, but as far as I go, I can't touch your owner-occupied. It has to be for investment purposes only.
Well, there goes one of the questions I wrote down earlier.
No,
got to come up with another one real quick. Jeez.
I think of private money like a valet parking, right? There's times where time's not important. I've got time. I can circle around. I actually did it 3 times around this.
So did Dan.
Today,
he
right?
drove 3 times around trying to find a parking spot.
Totally. But however, if I was really pressed for time and I left no room for margin and I was just trying to be quick, right? I might have, if there was a valet option, I might have spent that extra couple dollars because my time is now money. And in a 30-year world, you're marrying something, right? You're dating me. We're 30 days, 90 days, 60
Tinder
days,
fling.
a year, or maybe 2 years, right? So when you think of expensive, you hear 12% versus 4. That's crazy. Why on earth would I ever want a 12% versus 30? Or 4%? And when you look at something, if it's strategic for the right purpose, right? You're using this tool to be in and out very quickly. I'm all cash. I'm quick. I'm easy. I fund in a few days, right? Yeah. So you're really paying for the speed. And if you're only going to hold it a couple of months, well, 12% for 2 months is not a big deal at all, right? You actually build that into the cost of the acquisition.
Exactly. And that's how you got to do it. You got to always factor it into the cost of acquisition. It's not like,
Well, so Scott, hard money has saved my bacon a couple of times. Like you say, you jump in and you get things done when lenders can't. But I've strategically used hard money comparing an FHA rehab loan. A full. I mean, we're talking the excruciating 60 to 90-day process of getting all the documentation in, the rate, the fact that FHA now penalizes you and makes you have private mortgage insurance for 30 years. So this particular first-time home buyer was going out. Actually, he wasn't a first-time home buyer. This particular first-time buyer was going out and purchasing a home, and it made more sense. We compared apples to apples. It made more sense to pay the fees, which we'll get into in a minute, and the rate at 12%. Versus a 3.75 30-year fixed with the normal points associated with an FHA loan, and use hard money to get in there quickly, do his work, refinance to a conventional loan, no PMI. I mean, we put it on paper. I gave up a transaction as a result, but I've got a client that's made a very good financial decision now, and he's made money in doing so. So strategically, hard money or private money, I like to say private money. Hard kind of sounds maybe dirty, but private money is a great option. So I love it, man. I love that you make that point about it being strategic. But let's talk about terms, okay? Tell me, for example, the typical terms of a hard money or private money loan.
Terms are like your thumbprint in your lending world, right? I've got, the cool thing is that I don't work for just one company. I'm kind of like a broker. I'm a hybrid. I've been lending forever. I've been a broker. I've worked at the banker. I realize the value of both, but in private money, there's no a niche like this that I've kind of filled, where I'm friends with everybody in the industry that owns either a private money company, or I have private investors, and they all have a different appetite. So some of them want a 2-year term, whereas some, of these bigger companies want your 30-day, your 45 days, 90 days or less. Yeah. And so terms vary. So if you're going to be, let's just talk at an auction, right? At an auction, if you want to turn it really, really fast, I've got, 12%, and a normal loan would look like a 9-month term. But if you refinance out of it within 45 days or less, we credit you back 2 of the 4 points we collected. So we're giving you basically 2 of your points back for getting out within 45 days or less. If you need it for 75 days or less, then we give you 1 point back, and then anything from that 76 to 9 months is already accounted for at the 4 points. I have another option if you're absolutely not going to get out of it within, the 45 or 75 day option. I've got a lender that will actually do, I wrote this down, 10% down at an auction, right?
Wow.
9.5 rate for 9 months, and that's 4 points.
Wow.
Right?
Wow.
So I've got different investors depending on what you're trying to do, and that's where I don't have a cookie cutter approach, and it's really turned me off in the past to be with these companies and to see them kind of cattle prod with no service, right? For me, I'm not trying to sell a coaching program or anything, and I've seen so many people pay tens of thousands of dollars to find that they spent the money that they needed to go buy a house, right? And our education is free. We don't get paid unless we do a loan for people.
Exactly. Well, and do a great job for them too. And here's the thing, Scott, you just hit it on the head. 10% down for a hard money loan.
Is there a limit on how much you can get?
No.
Wow.
See, that's crazy. So I just learned something today. A general myth that I've always come to known is you needed 20%. You needed to give the investor 20%, right, in order to get.
I have some funds that are like that.
Okay, but 9% with 4 points, 9% with 10% down, 9% rate at 10% down. Those are phenomenal terms.
It's great.
Yeah, that was my next question, was what is the cost of the money? So the origination fees are approximately 4%, or
correct, and they'll vary. If you're going to do a 9 month to 1 year or a 2 year, if you want an extra year added, then it's just usually like 1 or a 1.5% addition.
Wow, that's phenomenal info. We got a ton more questions. We got to ask this guy, but we got to jam to a break.
Yeah. I mean, I'm glad that you're here, man. Yeah. I mean, you're definitely educating a lot of people, I think, including us, on some of the things that are going on out there. In addition to getting a loan the normal way, this is some good info. So stay tuned. We will be back with more of Scott here on Seattle Real Estate Radio on KKOL 1300.
Seattle Real Estate Radio with your hosts Christian Nossum and Dan Keller continues after this. Time for more Seattle Real Estate Radio with your hosts Christian Nossum and Dan Keller.
Hello and welcome back to Seattle Real Estate Radio here on KKOL 1300 AM. We are back again with Scott Estes talking about hard money, and I'm learning a ton.
Powerful.
And I'm very grateful that you were able to come on today and help educate some people on definitely different scenarios that you can use hard money for. So, I mean, Dan, I know you had a couple more questions. You wanted to piggyback on.
A couple of follow-up questions, but I know a lot of real estate professionals and mortgage professionals.
No, you don't.
Well, they follow. I know a lot of them. Yes, I know a handful, or
you
more,
know a lot
that follow our show, and I'm not. I send out our recordings to my colleagues and a lot of real estate professionals, and what a valuable resource Scott will be. Whether I know a lot of our listeners are homeowners and potential first-time buyers, but this is just phenomenal info. So I think something that I would love our listeners to understand is, let me talk about really traditional mortgage lending right now. The application process can take, normally our service levels in our office are 24 hours. Fill out the online application, submit your financial docs. We'll review that within 24 hours and get back to you. Talk to us from a private money standpoint. Is it similar, the same process? Credit pull, We're going to look at your financial docs. We want to make sure that we're going to look at your title and make sure that you're not crazy.
Absolutely. We're going to touch all of those, but our emphasis is a little different.
Okay.
And our emphasis is, your credit. I don't have a minimum credit score.
Okay.
So you can have really bad credit.
Okay.
I've got some builders that were crushed not too long ago, and they're still paying the price for that. And so if they've got, a good enough down payment and, can swing a hammer and finish a project, then that's what I'm looking at more so than their credit history. I need to make sure they can pay for the loan and that, whatever the project is that they can execute that. But no down, no minimum credit score. The application process is really simple. I know what a 1003 is. I filled them out for years, and it's actually much less than that.
Okay. Another acronym, Christian.
Yes.
It's kind of an acronym. In the lending world, a 1003 is a loan app.
Got it.
Correct.
Sorry about that.
Okay. No. We joke all the time about acronyms.
Yeah.
And they're
so prevalent
all over our industries. But
no one ever knows what the hell they mean.
No, exactly.
Yeah.
So you've got no credit issue. I'm looking at the overall picture of the property. What are you buying? How much can you put down?
What's
how
the
fast your
purpose
exit
of it?
strategy? The exit strategy, really. What are you trying to do? Because if you're going to hold on to it, now I've got to make sure you can qualify, and that's a totally different ballgame. So for somebody that has bad credit, I need to make sure that they're just going to fix and flip or have a really good exit strategy, or they need to be getting pre-approved with Dan over here.
Okay,
exactly.
So then, as far as let's talk about somebody that may have poor credit or may have had a bankruptcy or a short sale in the last 3-4 years, and they don't have stellar credit. Are you going to want to see assets? What are you going to want to see to cover your risk? I mean, obviously, you're going on the title with them. So if anything were to happen, obviously you could take the property. Yeah. But from a qualification standpoint, if there is no credit minimum, what are some of in our road, we call them compensating factors. What are some of those?
Absolutely. Obviously, I'm going to look at their job, their employment, their credit. And most of my customers have really good credit. Again, this is not for people that are desperate and down and out. These are savvy investors that usually make a lot more than my first-time home buyers ever did.
Okay.
So, most of them have really good credit. It's really just how I'm going to pledge that. Some companies, require a certain credit. Others don't really care. But the compensating factors is how much are they putting down? How much are they buying this for? Are they getting an auction, getting a really sweet deal, or are they paying full market value and actually overbidding for a property? Right. So I really have to look at the collateral because I'm in first position, just like the bank would be, and we're secured by the first.
So is there like an equity stake or an equity, not stake, but is there, say, a percentage of value that you won't go over, or does that depend on the...
So again, it depends, right?
Yeah.
It depends on what you're doing. If you're at an auction, again, there's 10%, right? Versus if you're going to come to me and maybe your scenario fits a 20% down, that's usually the general, You could figure about 20% down on a fix and flip or on any of the products.
Yeah. Got it.
And on a refi, think about 65%.
Got it. Like that's where I was trying to go, but I couldn't figure out how to phrase that one.
Purchase money is different than a refi.
Yeah, exactly. Okay. So what are some other scenarios that people are using hard money for? I mean, like a fix and flip. So you're buying something, immediately fixing it up, you're going to flip it, you're going to resell it. What are they doing with that, and what kind of deals can people get, and why does it make sense to use hard money?
It's perfect. If I'm going to go get an investment property with Dan, he's got a different set of criteria. And when you actually look at it side by side, you'll find that my money is typically going to get you in faster. So the cost of time, right? I can get you in a property in a few days, usually, like you said, 7 or less.
Yeah,
whereas
which is crazy fast.
Super fast, right? So speed is again a compensating factor.
And that's a huge deal right now where there's competitive offers, multiple people making offers on a house.
Exactly.
Although I think a lot of times people are buying foreclosures maybe in your situation, so there's not necessarily multiple offers where that's going to make that big a difference. But
I have another example would be a guy in Bellevue. I've got a guy that's very wealthy. He's trying to buy a $3.5 million apartment complex, and somewhere between 11 units or so. And he's been beat out twice. And so his agent calls me and says, Scott, I think we need you. Can you do something with this? So we made him an all-cash buyer. Because he's a cash buyer, he was able to make a little bit lower of an offer and work in that cost, right?
Exactly.
And we won the deal, and then he was able to get a normal loan and have his original lender refinance him out of that. So he dated me real quick, and then he's going to get the long-term takeout financing with his lender. But I was the solution to be an all-cash buyer, win the day, and get.
So that's kind of a high level, very expert scenario. But to continue on that, so are there, I mean, Dan, maybe you can help me out with this. Yeah. Are there seasoning requirements? So what that means is basically, does the money have to be seasoned for a certain amount of time? I mean, how's that
beautiful question? Work? I love that you guys know this so well.
We did not plan that ahead of time.
No, it's a great question. You guys understand what to ask, because that's we got title seasoning, right? So if a lot of investors actually, they go pay cash for something.
Exactly.
And now you have title seasoning, right? Because you want to cash out refinance. That's totally different than a rate and term refinance. So a rate and term means that you have a mortgage with a deed and a note with me as a lender, and you can treat that with most lenders next day, right? So I could buy the house today, and I could use a new appraised value tomorrow. No title seasoning whatsoever as a rate and term. However, if you spend all your cash and you liquidate all your money, you're going to be cash poor for a while, so you really have to figure that into your purchase.
Exactly. Interesting.
Wow. Yeah.
Interesting.
Big tips. Wow. I got a follow-up question a minute ago. I didn't want to interrupt you guys because I knew where you were going with the seasoning, which is a question that we wanted to get to anyways, because that's big. Commercial? You mentioned commercial. This guy bought an apartment complex with hard money. Wow. So it's not limited to just residential real estate.
No. And the loan amount too.
Yeah, there's no cap on the loan amount.
That was my other follow-up question was $3.5 million. So it sounds to me like, I mean, I'm sure there's a limit at some point, but I mean, I don't know.
He hasn't seen it yet. I don't know anybody yet.
If somebody listening helps me find it.
Yeah, exactly.
Okay. Hey, if you're listening, let's help Scott find his cap.
Yeah, exactly. How much hard money can you possibly get on one deal?
5 mil?
12 mil, 30 mil.
Let's help them find it. You know, so residential, no cap. I mean, we're talking somebody could go purchase a home at the auction for $1 million. Absolutely. As long as they have the minimum down payment requirements, the credit application looks good.
I've got guys at all three of the auctions in King, Pierce, and Snohomish. And so basically we're going to figure out, about 2 weeks before the auction is when you want to really start looking. I mean, some people are looking months before and most of them never go.
Yeah, exactly.
So if you start watching a couple weeks and we start watching that, then we're going to be able to be at the auction with you. If you want to be there or just let us do it for you, then we'll acquire the property. You'll come and you'll bring whatever down payment we agreed to, and now you own the property.
Wow. It's a huge deal. So anybody looking to get into an investment property or looking to do flips, I mean, this is probably a good way to go.
I'd say I do more at the fix and flip. I've got a lot of friends that do the auction. I like working with agents and lenders, and a lot of those guys have more of the fix and flips. And I've got a product that is all-in-one exclusive where you can, purchase the property in cash, and then also have a set amount of a budget allocated for your remodel costs all in one. Because before you were talking about a 203, FHA loan, you got to go owner occupied, and that is a very cumbersome loan.
Yeah, it's not easy.
Yeah, I mean,
not. And you got to find a contractor that's willing to play the game too, which is almost as hard as getting the loan.
Getting the loan is one thing. Getting them through the actual approved process is really difficult. And so by the time you've played cat and mouse with that, most people are really tired. Whereas with me, my clients, they're the ones that are winning the deal with all cash. They got in, they flipped it, and now they got it back on the market within 45 to 60 days.
Yeah, that's huge. That's huge.
And they only came with 20% of that whole number. So if they bought a house for $200,
is that an example you got right there?
This has a different one. This is one we just did in Buckley. I got one. We picked it up for $136,000. Needed $25,000 worth of remodel work. We thought it was actually going to go for about $235,000. It went for $270,000.
Wow.
So the investor, really only put about $33,000 down and used the rest of our money to fund it and finish it and then flip it, and then our loan gets paid off and they walk with the net. And
wow.
Yeah, great.
That's a deal.
Yeah,
I like deals.
I like deals. I like making money, and that's easy. Money. I don't want to say it's easy. You make it sound easy, but all
right. I got one question.
Yeah.
So in this market, it's super tough to get a house sometimes, and we were talking earlier about how financing's tough to get, and sometimes, I mean, Dan's great because he can close deals in 15, 20 days, getting a normal loan, but there's so many people that are getting all cash and they're beating everybody out. Do you have an option where someone can use all cash using your hard money to buy the house, and then quickly before they move in, refi it as their own owner-occupied home?
Absolutely.
Wow.
So we would strategically, in this case, we would partner. Scott would get him the hard money. We would close on the loan. We'd already have the full application. It'd actually already be an underwriting at our bank. We turn it around, conventional or a jumbo loan, and obviously we got to look at the seasoning requirements, but we turn it around and provide conventional financing.
Do you have any clue what those seasoning requirements are?
Jumbo with the different investors.
Yeah,
your market is a lot of jumbo, but we could, if we keep it down under 517, it's just
still a rate and term refinance.
Rate and term refi. Yeah.
That's awesome.
It is. So here's the thing. We've got to wrap up this segment. What I've done is I am going to read, so no disrespect to Scott, but I want to get his point across. I want to read this. So if any of these questions make sense to you, Scott has a solution. Has your bank or lending professional turned you down in the past? Have you felt that your lender doesn't understand a project that you're interested in? Is your lender slowing down the process and your success in getting in your way? You never want to wait 30, 60, 90 days to close for a loan. So period.
No, ever.
And so if I can't help you, if a bank can't help you, and it's going to take more than 30 to 45 days, this is obviously an option. Do you wish there were more make sense lenders? They didn't care as much about credit and bank statements and collateral. Well, Scott has a solution. This guy, just in the last hour we've spent with him, I've learned a ton. So we're going to put Scott's information up on our website. We're going to be back here after the break. We're going to talk more about Scott. And wow.
Yeah, that was some good stuff.
Wow.
Why don't you throw out your phone number real quick?
425-891-8260.
You're listening to Seattle Real Estate Radio with your hosts, Christian Nossum and Dan Keller.